So this is New Zealand dollar Japanese yen end of day buy analysis for Thursday the 19th of October. This buy analysis is purely hypothetical and does not constitute a trade recommendation or investment advice. So the signal for this trade has actually come off this indicator I'm using here. Red triangles indicate buy signals, black triangles indicate sell signals. Now, most recently on the 18th, as you can see, we have had a signal indicating a buy. Now, prices have moved quite a bit from the entry, but the signal is still valid, I'd say. So let's just see where our stop placement. Our stop placement is at the low of the signal candle, which in this case would be at 80.20. Yes, 80.20. So let's just indicate that on the chart. 80.20. So our hypothetical stop would be at 80.20. Let's just get on the chart. So 80.20, and let's just save that. Let's also put a buy arrow on the chart as well, indicating the candle which provided the signal, just there. So we've got our stop at 80.20. First potential take profit, hypothetically, would be at 82.70, and let's just get on there as well. 82, as that is the most recent swing. 80 to 70, and above that the next swing would be also at 83.91. So it is pretty tight in terms of range, but New Zealand pairs, apart from say the New Zealand pound, was it 93, was it? Let's just get that right. 83.91, 83.91, 83.91. That would be the very next level. So we've got to where our hypothetical take profits and stops will be placed, above which I would have a look on the higher time frames. Now, of concern, on this signal, I'll be definitely looking at how prices and the current structure of how the New Zealand dollar Japanese yen has responded. So supportive of the bullish move is this higher low. So we've had our low over here late 2017. So in September on this daily chart, we did have a low posted here for a strong move to the upside, and then we've now posted a higher low. So that is conducive of a bullish price momentum, a higher low, series of higher lows. We've got a low and a higher low, but we should be cautious as we have had a high and a lower high being conducive of bearish price momentum. So if we were to say, let's just have a look at having a trend line, and let's just put this trend line about there, and we drag it across if it works sometime today. So yeah, let's put it there. So our trend line drawn across there. So we've had prices potentially coming up to this trend line and could potentially reverse from there, but to the downside, we did have the supportive of prices was the lows and the higher lows. So I think they call it a pennant or something. So if we were to do that, we could see that prices are going into a bit of a squeeze at the moment, where a breakout potentially, probably say to the downside, would likely be the next outcome, but we might break down, find some support, further support down here, and break to the upside to retest those most recent highs, and overall be supportive of the bullish price momentum. So let's just have a look at the time frame above, the weekly time frame, see where prices are. Again, on this weekly time frame, we do see support for higher prices in that in mid-July, this is 2016, was it? Yeah, 2016. We did form a bit of a base. We're in a bit of a range down there at the bottom of it for a very long time in 2016 before we broke to the upside for a test of a 200 period moving average before a sell-off, and we posted a higher low. We broke again to test the 200 period moving average, a sell-off again to post a higher low. So we looked poised for another retest of this 200 period moving average, currently sitting at 82, before potentially posting another higher low. But if we do go up to the 82 level where we've got 200 period moving average, we do break down, we could potentially retest the these lows in and around the 78 and where is that, 76. But overall, the higher lows, even though we do have a bit of a flat top here, we do appear to have some resistance in and around that 83.50 level. If we do break successfully and retest from the other side of this 200 period moving average, we could potentially see prices move towards the 90 level on the New Zealand dollar Japanese yen. We do have some resistance above, but we are posting higher lows, even though the tops tend to be flat in and around that 83.50. Prices do seem conducive, especially in the medium term, to be heading upwards. So if we go out to the monthly time frame, let's have a quick look to see how prices are developing. Oh my word, the chart is this. We've had our low here. We seem to have posted a higher low there. This sell-off in August, for the month of August, it's not very good at all. It's a pretty strong sell-off. Candle closing near its lows. We are still operating within the shadow of this candle. The prominent move in September, we tried to retake the highs of the candles. We were not able to. We did have some selling as prices did try to trade above the open or the high of that candle, which was at 83. How close did we go in September? Let's have a quick look. Just give me a second. We went up to 82.74 before selling momentum drove prices down. In the month of October so far, prices did drive down further, but we did find support before we retested the lows of September. So a potential move up to the 83 level to test the August, the strong bearish candle on August is definitely looks likely at present if we don't continue our sell-off in October. In around that 84 level, we do seem to have a bit of resistance, 83.50 to 84, before we could potentially move up to say 90 and above that 92. So that should summarize my analysis, my end of day hypothetical buy analysis for the New Zealand dollar Japanese yen. So before I go, LCS, like, comment, subscribe. Thanks for watching.